All right, what is up, everybody? Divine Hood here, coming at you with another daily update on Bitcoin and the crypto markets. Okay, guys, so Bitcoin got a little bit of a rise yesterday and a bit today, kind of some actually slow, grindy price action today. But we did get a move up, hitting our resistance that we laid out last week in the live streams last week. We were looking at this resistance from about 106.6K up to about 107.5K. And we are starting to get some resistance here, but we're not really dumping. This morning, we saw a little bit of a flash dump, a minor dump to the downside, but overall, we are holding our wave 4 targets, and I will go into that in just a second, but we are at resistance. And I do have to say this, the way that this moved up looks so far, it does look pretty weak to me, and there is still a possibility we could reject here on the overall bearish back test, bearish back test of our large channel that broke to the downside. So let me go ahead and zoom out onto our 8-hour chart. And if we look at this large channel, let me hide some of these volume profiles here. Not that one. We got to hide this one. And if we look at this large channel here that broke to the downside, what we were looking for primarily last week was after I wanted to personally come down a little bit lower to take the liquidity out, but we're looking for, if the low was put in last Tuesday, we're looking for a dead cat bounce to now back test the anchored VWAP from 74K that we lost in confluence with the channel breakdown as a bearish back test. And if we do reject, we can expect those new lows to be coming in on the charts. So we are still in the process of that. This is taking some time to play out. But we're finally, over the weekend, we were able, primarily on Sunday, we were able to get a little bit of a push up on Bitcoin, and we are testing that resistance now. Now, personally, I would like to see one more high being made where we actually do hit the channel, and we barely hit the golden pocket. You can see, well, we hit the 618 of the golden pocket, and we did see some minor rejection from that 618 of the golden pocket. But I would like to see, personally, one more high being put in. But if we do put in one more high, we do have to look at this as a potential 5-wave impulse, a wave 1, a wave 2, a wave 3, 4, a 5-wave impulse, where then if we do push up in a 5-wave impulse, we might see a 3-wave corrective move before bouncing and continuing this uptrend, or just creating a bigger range in the making that is going to last longer and have a bigger sideways range really between 107K and between those 98K lows, where if we then form the range rejected from here, we could come down, take out that liquidity, and then maybe see a real push to the upside. So do I know what's going to happen? No, but we are getting close to resistance here. We're not really seeing much of a rejection so far here on this resistance, but I would like to make one more high. And the reason why I'm looking at this as a potential 5-wave impulse here, first off, if last week we were looking at a bigger 5-wave move to the downside, a wave 1, a wave 2, a wave 3. We were looking at this being a potential wave 4 and one more low to be put in to finish an impulse to the downside. We did have volume increasing. We were breaking major levels of support, and it did look like we could put in one more low. But now that we've come up and we've hit the golden pocket from our potential wave 3 highs down to our wave 3 lows, it has now invalidated that impulse to the downside, the one I just showed. So now we have to look at this more as a 3-wave corrective move, and we could start to really push up here. Now, from the lows, we could be looking at a couple different things here, because our low that we made last Friday was not lower than Tuesday's low. So we can either be looking at this still as a 5-wave impulse with a truncated 5th wave, which is very, very rare, or we could be looking at this as the low from Tuesday is going to be a bigger low to be put in, and now we are going to get some impulsive price action to the upside, meaning maybe a double 1-2 impulse here, a 1-2, 1-2. This is going to be our 3rd wave here, and then we're going to get a couple of 4-5s in here, pushing up to test resistance. Or another thing I am looking at is just a impulse up from last Friday's lows, a 5-wave impulse to the upside. And one of the reasons why I'm looking at this as an impulse is because it is respecting our target zone. So if we pull a Fibonacci from the lows of our potential wave 3 to the highs of our wave 3, and we turn on our wave 4 targets between the 0.382 and the 0.5 Fibonacci, you can see we are bouncing from that 0.382 fib level. And in a strong trend, the 0.382 does often act as support or resistance. So it is telling me that we might, at least locally, continue this trend to the upside to make one more high, actually touching the anchored VWAP that we broke down last week. This is our very, very key 74K anchored VWAP, which now that we're starting to close weekly candles below it, we need a higher time frame back test of that anchored VWAP to confirm whether we're going to reject and create lower targets, or we're going to reclaim it and really start to push to the upside here. So 107, the anchored VWAP, at least on Coinbase, is right around 107,340. That is a key level in confluence with the bearish backtest of the channel that we broke down from last week. And because we are bouncing from our 382, I do think it is possible to make one more high into that area. It would also give us some nice potential bearish divergences on the chart here. Higher highs in the price action, lower highs in the momentum waves. And it would also give us some nice bearish divs on NAMI, as well as money flow bear divs on NAMI, which is when we see that setup with Market Cipher B having momentum wave bear divs and NAMI having both the money flow and the momentum wave bear divs, that is a really good trade setup for me to enter a trade, a confirmation to enter a trade. So that's kind of what I'm looking at for Bitcoin. Not a lot has happened. We are just still ranging sideways. And if we want to look at our sideways range, we can turn on our sideways range here. You can see there's a couple ways to pull this range. So you can either pull it from the lows, or we could pull a little bit more sideways from pretty much right when we broke the channel down. And after we broke that channel down, if we just pull it to right after that channel broke down, you can see we're kind of forming a sideways range. Either way, the volume profile pretty much stays the same. The key volume levels pretty much stay the same here. And what I'm looking at here, if we do come up and we do reject making one more high, we will have some nice confluence for support as well if we do see a support. So first off, I want to show you right now, if we pull a golden pocket from the lows of last Tuesday to the highs that we made today or Sunday, and we look at that golden pocket, you can see that golden pocket is coming in at a very, very key level. It is where our new, fresh, naked weekly point of control that just confirmed yesterday, and it's in confluence with our smaller range point of control, which this range only goes back till Monday or Tuesday of last week. But either way, this is a nice little support level where we might be able to see a bounce if we create that fifth wave higher. Now, if we do, we will have to repull this fib. But we can also, if we're looking at a golden pocket of an impulse, if we're looking at all of this as a wave one, and then this could be a wave two before seeing a bigger explosion in a wave three to the upside, then what we're still going to be looking at is pulling our golden pocket from the lows of the impulse to our new highs. And let's just throw them right up to that anchored VWAP. And you can see that golden pocket would be very, very close to our target anyways. So nice support level below us, around 101.9K, 102 to 101.9K. That is an area I will be looking for potential scalp long opportunities if we do come down with some bull divs into that area. And on the other hand, for bearish, for short positions, I'm going to be looking at one more high being made with some local bearish divs on the chart with those confirmations on the chart. So if we do come up into that 103.5, 107.5, excuse me, 107.3 to about 107.5, because if we turn on our naked daily points of controls, you can see we have a fresh naked daily point of control that's at 107.5 as well. So that general area of resistance that we've been looking at all last week is still in play to me. And one more high making those bear divs. I would also want to see money flow on Market Cipher B kind of turning down on the hourly and maybe the 4-hour chart again. You can also see with, if I turn on those naked daily points of controls, not only is this level at 101.9 a naked weekly point of control, but it's also a naked daily point of control. So just a lot of volume support here where our current golden pocket is. And then of course we do have one level below that, a new naked daily point of control that formed over the weekend at 100.7, where if we turn on our 786, you can see the 786 and the value area low of the range is very, very close by to that as well. So a couple little micro support levels to be looking at, or local, I should say local support levels to be looking at. Value area low 786, naked daily point of control. And then of course we have our naked weekly point of control, golden pocket, and point of control of the range at about 101.9. Those are two levels where I will be interested in taking longs. Now, that is not an area where I'm going to set a limit long position and hope that it plays out. I never do that, really. Very rarely do I set limit orders and hope it plays out. As we're coming down to the area, I usually set alerts. I usually look at the chart as we're coming down there, and I want to see my confirmations to enter, because we do have to keep in mind the larger context. So let me go ahead and I'm going to hide some of the stuff I just put on the chart here, and we will zoom out to our daily time frame. And we can't lose track of the bigger picture here, the bigger bearish picture that was created, the bigger bearish sentiment bias, I should say, that was created by closing a weekly candle below our anchored VWAP and below our channel, our trend, our bullish trend that we've been in really since August of 2024. August 2024, that was kind of when that bullish trend started. So now that we're losing that channel, what we often see after the breakdown of the channel, will bounce from a local support level, will backtest in a higher time frame bearish backtest, and if we reject, we can expect to come lower. And if we zoom out to our weekly chart, you can see on the weekly chart, we are now closing that candle below. Let me hide this golden pocket here to get it out of the way. And I will hide this volume profile. You can see that we are closing the weekly candle below the channel. Now, I would say the way that the wick looks on this weekly candle, this last weekly candle that just confirmed yesterday, it is not the most bearish looking wick, and we might be able to see a move back into the channel. This could be a fake out of our channel, and we could see a move back into the channel. That is what I want to see to get more bullish. So far locally, my more macro sentiment is a little bit bearish until we reclaim that 107.3 to 107.5K area. And if we can flip that into support, then I will become more bullish on the charts, looking potentially to come up even to take out our 116K highs. Also, if we turn on our range, let's see, we also have a different range here. Yeah, if we look at this range that goes back, you can see from really the impulse highs, the impulse from 98K, the highs of the impulse. If we start that range pulling from that area in our volume profile, you can see that value area low, bearish backtest is in perfect confluence with that backtest. So a lot of resistance just above us, and really we're tapping into it right now by hitting the golden pocket that is in confluence. But this is really our big test, guys. This is our big test for Bitcoin. Is Bitcoin going to reject here and come and make new lows, taking out the 98.2K lows, breaking market structure, or continuing market structure bearishly? Or are we going to be able to flip this into support and continue pushing up, potentially even to our 117K area, where we do have some key resistance up in that general area? So if we look at that resistance, if we pull a golden pocket, a Fibonacci golden pocket from the all-time highs down to our lows that we made last Tuesday, we turn on that golden pocket, you can see that golden pocket is coming up very close to our point of control, and we do have the liquidity resting from those highs on, what was that, a Sunday, a weekend high, Sunday, October 26th. We have those weekend highs. So we have a liquidity grab into a golden pocket and a POC slightly above that. And for me, anytime we see a liquidity grab into a significant resistance, like a golden pocket in a intermediate time frame point of control of a range, that is a major resistance where if we do reclaim 107, that's our first order of business. We can look for a long on the back test of 107.5, and we might be able to take that up to that 117K area, 116 point, 4 to about 117K, 0.4. But that's kind of what I'm going to be watching for over the next few days here. Very, very key back test for Bitcoin. If we look at the liquidity heat map, you can see that liquidity is resting above that October 26th high, right up into that 117K level, coming right up into that golden pocket and right up into that point of control. So with the liquidity that is acting as a magnet, I will be looking for a move up there if we can reclaim, if and only if we can reclaim 107.3 to 107.5. And if we can flip that into support, then we would be finding reacceptance back within our larger range. We would be finding reacceptance back above our anchored VWAP, and we'd be finding reacceptance back within our larger channel, ascending channel, our bullish trending channel. And honestly, that's about it, guys. That's what I'm looking for. So right now on Market Cipher B, you can see money flow is still rising to the upside, about to cross over into the green, but we did not see bull divs at this low. And if this was going to be last Tuesday's low, or I should say Tuesday, November 4th low, then we really wanted to see this last Tuesday low have some bull divs down here, or we wanted to make one more low to create those bull divs and maybe take that liquidity. Because if we would have made one more low, we would have had some very nice bullish divergences on the chart with money flow bottoming out and starting to come to the upside. But we didn't get that. And generally on a larger low where you do see a more macro reversal, you will generally see those intermediate time frame bull divs. And so Market Cipher didn't have them. NAMI did not have them. They would have set up so nicely if we would have just taken out Tuesday's lows on Friday, but we weren't able to quite get down there. We bounced from the 886 Fibonacci. And because we bounced from the 886 Fibonacci, let's just go ahead and pull that golden pocket real quick from the lows on Tuesday to our highs that we made that next Wednesday, the next day. And we turn on that 886 Fibonacci. Let me make that color brighter so you can see that. You can see that's where we bounce from, our 886. But because we are in a larger downtrend, we do have to now give a higher probability that those last Tuesday's lows will be taken out, because when you hit an 886 in a bearish trend, yes, you can get a bounce from that 886 and create a sideways range, but it does make it more probable that those Tuesday lows will get taken out. And so right now, I guess I would have to say I'm neutral, because we have also hit the golden pocket, invalidating the bigger impulse to the downside. And at the same time, this bounce does not look the best. If we want to see a real bullish scenario, then our hope is that this is a double 1-2, a wave 1, a wave 2. There's your secondary wave 1, your secondary wave 2. And we need to start pushing up in a 3 here, really breaking up above our big resistance area, and then we could see a larger 4 and then a 5 pushing up here. We would look for 2 4-5s if we saw 2 1-2s down there. So that is our bullish case scenario. Our more bearish case scenario is that we are seeing a more 3-wave corrective move here, and we're about to dump back down. And if we look at this move, the lows from last Tuesday, this could be a running flat here, and then we get that push up, and that's your 3-wave move with a running flat in there in your B wave. And we'll just have to see how this reacts. But locally, if we zoom in locally, let's go into the 15-minute time frame. On the 15-minute time frame, we are creating, we were creating slight bear divs. I think that was a little bit better on the 12-minute. Let me check the 12-minute time frame here. Yeah, you can see here on the 12-minute time frame, we were creating those bearish divergences as we were making higher highs up into that golden pocket. We were making very slightly lower highs on the momentum waves, and our money flow was draining out of the asset as we were coming up to that golden pocket. And also, if we look at NAMI, I know NAMI's a little bit harder to see here, but you can see that we did have those bear divs on the momentum waves as well with NAMI. And also, we had the money flow bear divs here, lower high, and then that one is about an equal high. But yes, so we did see at least the possibility of a rejection from the golden pocket. For a majority of the day, we've been ranging sideways. And we can just look at this sideways range. We're kind of just trading within this micro range here, intraday range. I'm not interested in trading that range. For me, I'm interested in coming up, taking out the high one more time, and creating some higher time frame bearish divergences. And it is setting up nicely for some bearish divergences. If we can get a move up here, take out that high, and we get something like a small momentum wave here, it would create some 2-hour bear divs. We would also look on the 1-hour chart. On the 1-hour chart, it's setting us up for some nice bearish divergences as well. You can see we're already starting to get that second momentum wave up. So if we come up, take out the highs, and actually hit that 107.3 to 107.5K area of resistance, create those bearish divergences on the chart, create more bearish divergences for NAMI as well, and the money flow bearish divergences, then for me, that would be at least enough of a confirmation to enter a short trade. But that is honestly about it for Bitcoin. If we go onto our order flow charts real quick, Order flow is kind of neutral here. We're on the 15-minute chart, and you can see really for the majority of the last day, or really 2 days, we've been dumping in our open interest. And it's just positions closing out. Now, of course, we expected to see positions starting to close out once we hit that golden pocket. But if we come up in this area right here is where we hit the golden pocket for the first time. Let me just come in on this right here. If we match the charts, 15-minute time frame, you can see this first high here when we hit into that golden pocket. I will turn that back on. Let's see. There we go. When we first hit into that golden pocket there, if we come in onto our order flow charts, you can see actually we had a lot of, it was right in this area here. So we did have a small dump in open interest, getting some positions stopped out once they hit that golden pocket. But you can see here right after that, we had shorts coming in, and we knew those were fresh shorts because our open interest was rising here. So we are seeing a lot of people attempting to short the golden pocket on the first test. But after forming a range, what is happening now is we are starting to see some late longs coming in right into your golden pocket. Now, this is a bad scenario for me because if we see late longs stepping in at resistance, those can be used for a squeeze to the downside, a long squeeze to the downside, fuel for shorts. So we definitely don't want to be longing into resistance, and we are seeing some longs come into resistance. But since then, our open interest has kind of dropped a little bit with that flash crash we saw in the morning here. You could see a crash in the morning, and we saw a lot of those late longers actually getting liquidated or stopped out on that position because they were longing literally right up into resistance at the top of this micro range that we formed throughout the day. Those longs were stepping in, and then as soon as we flush and crash down, of course, what is a forced stop on a long? It's a market sell. That's why our CVD was going down here. We were seeing those late longers getting stopped out of their positions. No one should be longing into a resistance like that, but that's the game. And so some of those longs have already been flushed out. Actually, I would say a majority of those longs have already been flushed out. But if some of them are still being held open, that could cause some fuel to the downside. All right, that's pretty much it for Bitcoin. Let's go ahead, and I want to move on to our total market cap real quick, and we'll go into some of the altcoins. Before we do, I want to talk about the partners of the channel. The main partner of the channel is BYDFI. They are a VPN and KYC free exchange. All you need is an email and a password to sign up. If you do sign up using my affiliate link, they'll give you a minimum of 20% discounts on trading fees. You can actually earn up to 40% discounts on trading fees if you deposit some of the larger amounts into the exchange. And they're offering some great initial deposit bonuses. If you deposit just $100, you can get a 50% deposit bonus, which is the highest I've seen in the industry. And then they're offering great 20 to 10% deposit bonuses, depending on how much you deposit into the exchange for your initial deposit. They're also offering up to $8,100 in futures trading bonuses, depending on how much volume you move in the futures markets. And lastly, I have partnered with BYDFI to create a Telegram community where I do post some of my trade setups and my thoughts on the market ahead of time, or when I don't have time to hop on and make a video or stream. If you are interested in joining that community, it is free. All you need to do is sign up with BYDFI using my affiliate link and deposit at least $100 into the exchange. Now, that $100 is your money to trade with. You will get the discounts on the trading fees. You will get the 50% deposit bonus. And then once you've done that, you can click on the link in the description of this video, the Telegram link. And once you're in that Telegram channel, type in /verify and then your user ID, which will be right up in this area here. It's probably going to be a string of letters and numbers for you. And that'll get you access to the Telegram community. And once you're in, you're in. Also, BYDFI right now that is running a trading competition just for my community that is started on November 5th. And so what they've done for us, and this is in celebration of me hitting 3,000 subscribers on YouTube, they are doing a competition where they have deposited $2,000 of their own money into a prize pool. And for every $1 million that's traded, they will add another $100 to the prize pool. They are doing a 30-day trading competition. So this goes to through December 5th. And the top 5 traders of this competition will earn 80% of the reward pool. And the other 20% of the reward pool will be randomly distributed amongst some of the other traders in the community. Also, they will be giving away a set of Samsung earbuds randomly to one of the participants in the trading competition. So if you're interested in joining, this is a way you could maybe earn some extra money with your trading that you're doing anyways. And for me, I just want to say thank you to BYDFI for doing this competition for us, and it's great, guys. So if you're interested, BYDFI, link in the description. The next partner of the channel is NAMI Trading. NAMI is this lower momentum and money flow indicator. I use it on all my entry and exit confirmations on trades. So as I described earlier in this video, if we are coming up to that 103K area of resistance and we are seeing confirmed bearish divergences on the chart, maybe some money flow bear divs on the chart with NAMI, it will give me the confirmation to enter that trade instead of randomly hoping that we do reject from this area. It kind of gives me a bias on whether to enter a trade or not. So if you're interested in purchasing NAMI, I think it's a great tool to use for entry and exit confirmations. They are offering my community 50% off. Divine50 is the discount code. The link to NAMI Trading is in the description of this video along with that discount code. And if you do sign up using my affiliate link, you can get that 50% off discount. And then lastly, we do have MEXC and Bybit, both great exchanges offering discounts on trading fees, some deposit bonuses, 10% deposit bonuses, and futures trading bonuses. If you are interested in joining with either of those exchanges, I think both those exchanges are great, reputable exchanges. Never had an issue with either one of them. Okay, let's move on to our total market cap. So with the total market cap, I'm just going to zoom out to the 4-hour chart here. We did get that. And actually, I'm going to zoom out to the daily because TradingView is doing this weird thing where you can see the wick is not coming down to the low on the 4-hour time frame. But if we go zoom out onto our daily time frame, and I know I talked about this on Friday's live stream, but Friday and Thursday's live stream, but we were looking for the SFP of the crash lows into our pitchfork band and into our value area low of the range. And we got that. We've got the SFP into our pitchfork band of support, and we are seeing a move up from here. And I did say on Thursday and Friday that I expect at least a dead cat bounce from this area to come up and possibly retest the value area low of the range that we broke down from, of our daily range that we were in for a few months that we broke down from. So total market cap is continuing to rise here. Now, I would say money flow is attempting to bottom out here, but it's not looking the strongest, and I am concerned about this move only coming back up to backtest this value area low before coming back down and maybe actually touching the value area low of our 2025 range that we did front run, coming into the value area low in the bottom of the pitchfork band. So just be aware that we could see some more dumpage. And what we're looking for, what I use the total market cap for, I use it for confluence for trading Bitcoin and altcoins. So if I'm interested in shorting Bitcoin at 107.3 to 107.5, just above us, and we're coming up to that resistance on Bitcoin with some confirmations on the chart, I will now come into total market cap and I'll look, is total market cap also at resistance? Because if it's at resistance and it's showing those bearish divergences as well, then it makes it far more likely that we are going to reject on Bitcoin. And then in that case, it just gives me more confirmation to enter a short trade on whatever coin I'm looking at. Now, I don't have to have that confirmation. Like if I just had on Bitcoin coming up into resistance with lower time frame bearish divergences on the chart, I would take the short, whether the total market cap was fully at that resistance or not. But it's definitely a confluence to add. So I just wanted to point out that total market cap is getting that little bit of a rise. And I do think we might be able to get a little bit longer of a rise up here to retest that value area low about 3.65 trillion. And that backtest is also going to be a very important backtest to tell us if the total market cap is going to continue this bearish trend of making lower lows and lower highs. On to Ethereum. Now, on Ethereum, guys, we are, let me just zoom in here onto the 2-hour chart. Ethereum is trading within this nice ascending channel. So we made our lows last Tuesday, and you can see on Ethereum, what happened on Ethereum is we came down. We had our initial dead cat bounce. We came down to our golden pocket, creating a higher low. And we had a nice bounce from that golden pocket. From that golden pocket, when we bounce there, now you can take an ascending channel and you can put those two pivots of those two higher low, the low and the higher low, and you can bring it up to that initial dead cat high there, and it forms a trend. And we can just see that Ethereum might be trading within this trend, this channel here, until we get up to the top of the channel, which would be our next level of resistance. Now, on Ethereum, we were looking at coming up to this purple box that we're kind of in right now. We're back testing it. We're kind of in it right now. Let me hide this real quick. And that was where our golden pocket, you can see our golden pocket from, we were also looking at a potential 5-wave impulse, a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. But now that we've hit this golden pocket, it invalidates this as a 5-wave impulse down. And we now have to look at this as a 3-wave corrective move, where now we could start impulsing up here and at least coming up to test some higher resistances above. So we hit the golden pocket, and now that golden pocket is also in confluence with the value area high of our 4-year long range. Now, this is far more important than just this local golden pocket here. So I'm going to delete that golden pocket real quick, and we're going to talk about why this purple box was a resistance in the first place. Was mainly based off 2 things. It is the bearish backtest of our pitchfork band. You can see on the pitchfork band, we were kind of holding the upper part of the band as support for a couple weeks. We lost the lower part of the band as well, and now we're coming up for a bearish backtest of that pitchfork band. If we do reject, we might come all the way back down to $2,700, where we do see some macro support coming in between 27 and 2,500. But also, let's zoom out onto our daily chart. You can also see it is our macro value area high on Coinbase. Now, Bybit has a different value area high, but coming back to May of 2021, so our 4-year long range. And anytime you break out of a macro range, you know, we kind of saw the backtest here. We see a range form above, but then we fall back inside the range. That could be considered a high time frame failed auction breakout of a 4-year long range. So we tried to break out of a 4-year long fair value for Ethereum. We got above it and had a failed auction for about 3 months, failed auction price action, rejecting from the top of the pitchfork. And if you fall back inside of that volume profile, oftentimes you'll bounce from a local support, or from a support level, which there was a major support level there at $3,200. Remember, that was our pitchfork midline in confluence with the Bybit value area high. Now, this is where it gets a bit complicated, guys, because on Bybit, that 4-year long range value area high was what we bullishly backtested and bounced from. And it's also our macro pitchfork midline in confluence with a large golden pocket pulled from our major last daily lows up to our all-time high. So we did expect a bounce from this level. That's why we had a box of support here. We expected a bounce. Now, the question is, for me, I do follow Coinbase volume levels more than Bybit. So if we're looking at Bybit's volume, we could actually look at this as still somewhat bullish, that we are having a bullish backtest of the value area high. And if we bounce here, we might be able to come make new all-time highs on Ethereum. But we also were looking at our 5-wave impulse, 1, 2, 3, 4, 5 has now been invalidated, because remember, we did hit this golden pocket, pulled from the lows of wave 3 to the highs of wave 3. And when you come down in a 4th wave and hit that golden pocket, it now invalidates that impulse. So we now have to look at our larger move up from 1,400 as a 3-wave corrective move. We could just be bouncing here, making a lower high before coming lower here. But on Bybit, we are bouncing from the value area high of a 4-year long range. But if we go on to Coinbase, which I do follow Coinbase levels, volume levels more, we are below that value area high. You can see we are below it, and it's pretty much where we're at right now. So let me clean up this chart a bit so you can see that a little bit better. Get rid of this. And you can see that we're in the back test of that value area high right now. We fell below it. We had our range above it. We fell back inside of it. And after bouncing from our nice key support level, we are rising up for a bearish backtest of the value area high and the pitchfork band that we lost. We rejected the upper part of the pitchfork. We tried to hold the band. We couldn't. We lost the band. And now, as far as pitchfork trading goes, if we reject on the bearish backtest of either the lower part of the band, which we're at right now, or even the upper part of the band, which where our next resistance it happens to be as well, then we can expect to come down and maybe tap the midline of this macro pitchfork, which is going to be around that $2,700 level. But if we might reject right now from the bearish backtest of the value area high, because now that we've fallen back in the range, we look for the bearish backtest of the value area high. If we reject here, we can expect new lows to come in on the chart. And because we did hit our golden pocket from the lows of wave 3 to the highs of wave 3, this golden pocket here, it does make it far more likely that the entire move up from 1400 was a 3-wave corrective move, and that now we are about to start a larger push to the downside. So at key resistance right now on Ethereum, very, very locally on Ethereum, I do think we could make a little bit more of a move to the upside. But if we look at our money flow on Ethereum on Market Cipher B, it is still looking pretty bearish here. Money flow looking bearish. Yes, we did get that green dot on Friday, which we did say on Friday's live stream. The green dot, if it confirms, it will probably give us a few days to a week of slight upside, like a bounce or a relief rally. And you can see on NAMI here, we have printed, our momentum wave is topping out, and we have printed a red dot on the day. Really, it was yesterday. No, that's today. Yeah, today. We have printed that red dot, and it confirmed with today's close that happened 39 minutes ago. Zooming in onto the 1-hour chart. Now, on the 1-hour chart, I am looking at Ethereum potentially creating a 5-wave impulse to the upside here. We'd have to look at this again as a double 1-2, a wave 1, a wave 2, an internal wave 1, an internal wave 2, and this would be your third wave here. You'd really want to see this thing start to push up soon here. We'll start to have some volume to the upside soon. If we're looking at this already right now as a 5-wave impulse, we cannot, because this would be a 1, 2, 3, 4, 5. Your third wave is your shortest wave in here. And for an impulsive wave, your hard rule is that your third wave cannot be the shortest. Sometimes you will get extended first waves, and sometimes you'll get extended fifth waves. But as long as the third wave is not the shortest, then it is valid. Right now, our third wave in here is the shortest. So the only way we can consider this maybe still impulsive price action to the upside is that we're getting some sort of diagonal here, a diagonal where it could be some sort of leading diagonal that we're going to push up. But we're at the key resistance right now. We are not seeing bear divs on the chart yet. And I do think if we could get one more high pushing up, potentially even up to our next resistance box at the top of the pitchfork band, where you can see our anchored VWAP is. Let me zoom out to the 4-hour chart. Anchored VWAP from our last major lows, the crash lows, are sitting there. And if we come back up and reject that anchored VWAP, then yeah, we can expect probably our trend to continue to the downside. And then let me throw on that anchored VWAP from the all-time high. Let's see, do I have that? I'll just throw it on real quick here. Anchor VWAP. Okay, so that anchor VWAP is a bit higher. But what I'm going to be looking at is if we can get above this level that we're at right now, really of about 3,600, then that push up to our next box of resistance between 37.89 and 38.62, where we do have the value area low of our upper range. Let's turn that range on. This range here. Let's see, it was right there. Yeah, value area low of your upper range is there. It's the back test of the pitchfork band, back test of the value area low. And then it was also the value area low of our smaller range. So let me just throw that range on of the last, from after the crash happened until the breakdown that we saw over the weekend. You can see that point of control is in there. Not value area low, excuse me. Point of control is in that range. If we look at our naked daily points of control here, okay, we do have the naked daily point of control down at the bottom where the anchored VWAP from the lows are, from our $1,400 lows. And what we want to see with Ethereum overall is to not lose this anchored VWAP. This anchored VWAP here is pretty much like Bitcoin's 74K anchored VWAP. So think of it, if you're thinking in terms of Bitcoin, Bitcoin has now already lost this anchored VWAP and is today in the process of backtesting that anchored VWAP bearishly to continue to the downside. Ethereum hasn't quite lost it yet, and we've already tested it once earlier in the cycle. But if we do come down now and start a sideways range on Ethereum, then we could expect maybe a small bounce from that anchored VWAP and play a sideways range. And that anchored VWAP is going to be where that naked daily point of control is going to be at as well. So let's throw that on there. Let me zoom in to get a better click on that. There we go. Naked daily point of control there. All right. And it does look like we do have one naked daily point of control at 3,700 that's in the middle of the pitchfork band. Now, to me, that is not the nicest level. I know we do have a 786 Fibonacci close by. If we pull that 786 Fibonacci, it is close by that. But that would be more of a micro resistance for me with a naked daily point of control and that 786. To me, I'd be looking up towards the anchored VWAP in the pitchfork band, the upper part of the pitchfork band. Okay, and honestly, that's about it for Ethereum. So we're testing major resistance right now. If we can get above that resistance, then I do think we're going to continue up to the top of the pitchfork band or potentially even much higher. If we can get back inside of that range, then we are going to probably see a move up to the point of control and even push up. Let's see. Let's grab that upper range point of control. So just this upper range in here. Point of control about 44.76. And if we pull a golden pocket from the all-time high down to our lows, throw that on there. Golden pocket. Okay, golden pocket is a bit... I thought that range was different. Yeah, okay, that's the range we're looking at here. So, before the breakdown occurred, POC is going to be right into some liquidity grabs and a golden pocket. And that's your macro golden pocket pulled from the all-time high to the crash lows. So 42.29 to about 42.90 would be the next major level if we can get above this purple box here. We're still fighting with our first resistance. Remember, our first resistance that we are at right now, we really need to start flipping this to support first. If we can't flip it to support, I do expect us to continue dropping lower. Okay, that is it for Ethereum. Now let's move on to Solana. Solana, guys, is still in a downtrend. Now, more macro time frame, we did front run that very, very key point of control of a 2-year long range. This goes back to, it's almost 2 years. It's like 20 months or so. It goes back to March of 2024. So March of 2026 will be 2 years. So a few months short of 2 years. But we've lost our key bullish pitchfork, and we are continuing this downtrend of making lower lows, lower highs, lower lows, lower highs, lower lows. So our key back test really here, for me, the key back test on Solana is going to be right around this 0.5 Fibonacci. And that is where our anchored VWAP from the all-time high and our anchored VWAP from the $96 lows are coming in. If we can, and then it's also the bearish back test of our pitchfork. So if we come up here and reject from that general area, around 176 to about 178 is where I would expect a rejection on Solana if it's going to continue dropping and come down. We are right now rejecting from our 382. And if we're looking at a potential push to the downside, a larger push to the downside in a wave 1, a wave 2, a wave 1, this is a sideways wave 2 in here, and then we got our third wave here. Our fourth wave can either reject from the 382 or reject from that 0.5, and then we could still make now 2 more 4.5s coming down, potentially even down to your value area low, which would be pretty aggressive. But that is what I'm looking at. So right now we're starting to find some resistance from that macro 382, not macro 382, a third wave 382 to the downside. Didn't want to do that. I wanted to hide it. Okay, but what I want to talk about more on in terms of volume profile trading. So first off, we lost our pitchfork. We're below our pitchfork. I'm going to hide this pitchfork for now. And we're just going to look at our large range, our 20-month, the range that goes back to March of 2024. And you can see that we tried to break above it. We were trying to break above it. We were finally able to flip it to support, and we came up to our next major resistance. This was a weekly level in confluence with a macro 786 Fibonacci. And since then, we tried to bullishly backtest and make new highs, but we couldn't. We've fallen back inside of our macro range. We formed a range, a smaller range back inside of our macro volume profile, showing that the market might be finding reacceptance for Solana to be its fair value to be valued between this $200 mark and about a $125 mark. And after forming a range back inside of our volume profile, we lost our key anchored VWAP support that was holding for weeks. So we were ranging between the value area high, anchored VWAPs, value area high, anchored VWAPs. We finally lost those. And so for me, and usually when you do reject if you find reacceptance back within a volume profile, especially a macro time frame volume profile like this one, and you find reacceptance, you can almost guarantee a move to backtest your fair value for that asset, which is the point of control of the range. And the fair value is at about 145, which you can see we did front run it on Coinbase, and we even front ran it on Bybit as well. So now I'm looking for a potential smaller range to form in this general area and coming down to take out those lows one more time, or even seeing a small dead cat bounce push to backtest those anchored VWAPs that were acting nicely as support for the last few weeks, now acting as resistance. And if we do reject from that 177-ish area, coming down and finally hitting our naked weekly point of control, hitting your large range point of control at about 145. So for now, I'm not interested in taking any trades on Solana until we come up to our resistance, which is going to be the bearish backtest of our pitchfork. Let me throw that pitchfork on. Where did that go? The bearish backtest of our pitchfork in confluence with those two anchored VWAPs. So that's the resistance that I'm looking at here in this general area. 175 to 178, let's say. And then the support level, the only level I'm looking really for longs on Solana is down around that 145 to 144. Now, if you want to play in between that, I mean, you can always turn on your volume profiles. You can always turn on your naked daily points of controls and look at this smaller range within here. But you can see there's no naked daily points of controls within this little consolidation. And if we look at our naked weekly points of controls, we do have one naked weekly point of control that's coming in around 157. Okay, so let's just mark that out real quick here. 157. And if we pull our current golden pocket from the lows last Tuesday to our highs that we made today, yeah, I guess our golden pocket is a little bit below that. But that would be, if we're going to continue to kind of form a sideways range in here, we could expect to maybe bounce from that level before continuing up if we're going to reject from this 382 right now. And then, of course, you could pull your volume profile of this sideways range, and you could see your value, your point of control of that range is in there as well. We are above the value area high of this small range. So as long as we're above this value area high, we might be able to continue locally in our bullish trend until we come up to our main resistance above us. Money flow looks pretty good on the hourly chart. There's no bear divs yet. And creating one more high into there would potentially create some nice bearish divergences on the chart here. And on NAMI, it looks like we're setting up for some nice bear divs as well. So that's about it for Solana for me. Other waiting for more macro levels to be hit on Solana. Going on to Sui. Sui is now this little resistance we laid out here. We did reject from that resistance. This was from, I believe, Tuesday's live stream. We came up, we made new lows. We came up, we rejected from that resistance area, and then we came down and made a higher low at your golden pocket. So that did play out for a nice scalp trade there. But now you can see we're actually flipping that resistance to support. It was resistance, got a higher low. Now we're flipping it to support, and we're continuing to work our way up to our main resistance area that we laid out really last week. This is all we've been looking at. So with Sui, and I know I've shown you guys this in the live streams last week, but we did bounce exactly from the bottom of our pitchfork, our lower pitchfork band. After rejecting from the pitchfork midline here, we rejected pretty much to the dollar, finally lost it. It was acting as support for a couple of weeks. We lost it. We back tested it bearishly, rejected, so we came down to our next pitchfork level. We bounced from the lower band, and now we might be able to see that higher time frame backtest. So if any of you guys were live with me on Friday, I kind of covered this in depth. When you're trading pitchforks and you're chopping around and you finally lose that level, you'll usually have an immediate low time frame backtest, and if you reject, you can expect new lows to come in. But then after bouncing from a more macro support level, you will oftentimes now see a higher time frame backtest of that same exact pitchfork midline or pitchfork level. And then if you do reject, you can expect to come down and make new lows. So the real key area for us that we're looking at is really that golden pocket in confluence with that pitchfork midline, the backtest of that pitchfork midline. And if we also pull our volume profile right after the crash to this area, you can see your point of control of that range is in there. And even if you throw it all the way, looking at all the price action since the major crash happened a few Fridays ago, you can see your point of control is in that general area. Let's see, is there... Yeah, so that's the general area of resistance I'm looking at, really between like that 237 or 238, let's say, and like 246. This box of resistance. Now, if we are going to continue to form a lower time frame range, like we formed a range in this general area before breaking it down, we now might be forming another range around the pitchfork band here before breaking down as well. So if we're going to form more of a sideways range, then we can just look at local support levels within this area. So pulling a Fibonacci from the lows that we had on Tuesday to our highs that we had today, we can look at that golden pocket. We can pull a volume profile. So let me go ahead and delete this one real quick. We can pull a volume profile from the end of the crash. And I'll zoom in here on the 1 hour time frame. Kind of this sideways range that we have here. All right, golden pocket's not aligning very nicely. I think let's pull it from the bottom here. Yeah, either way, the volume profile's the same. So then in that case, I'd probably be looking at the 786, which altcoins often retrace to the 786 anyway. So that 786 at the value area low. And then, of course, we're going to have our naked dailies in there as well. Actually, there is no naked dailies below us. So that's if you're going to continue to range sideways, that 191.58 area is where I'd be looking for a local bounce and potential sideways range. We can just watch that as it develops. We'll look at it in tomorrow's live stream to see if we do reject here, come down, bounce from that area. We might be able to see a bit of a sideways range form in here first before coming up to that area of resistance. Okay, that's it for Sui. Let's go on to Say. Now, Say is also at its resistance area, being that golden pocket in confluence with your large range point of control and your small range point of control. Zooming out onto the daily time frame. we're looking at this larger sideways range that goes back to April. So the crash lows at April, this potential kind of sideways range that could form in here within your pitchfork. If we're going to get a larger kind of selling exhaustion in this area. So you can see we're below the large range point of control. We did bounce from the value area low of that range. Now that we bounce from the value area low, we can expect to come up for a bearish backtest of that POC. If we do reject on that bearish backtest, then yeah, we're probably going to come down lower and maybe take out our lows at 13 cents. If we can get back above that POC, then I do think we will see a potential large move to the upside. But it's our small range. So zooming back in, let's go to the 2-hour chart. Our small range that is ended since the crash and our large range, our point of controls are both the same. And you can see it's pretty much right where your golden pocket and 786 Fibonacci is of this last move down here. Now, we do have to say that now that we've hit the golden pocket, this does have to be classified as a 3-wave corrective move, and we could be in an impulse to the upside. 1, 2, 3, 4. So it makes sense that we make one more high locally, actually coming up and hitting the pitchfork midline and maybe that 786, around 19.79. And after seeing a 5-wave impulse up, we would be then looking for a 3-wave corrective move down to make a higher low to continue the push to the upside. So for me, long story short here, we're at local resistance, and I would say really the better resistance is between the 786 and those points of controls, where we also have some liquidity from weakened highs, and weakened highs often get taken out. So we have our weakened high liquidity swing failure pattern. Into your 786 and your points of controls, your pitchfork midline. So for me, that's the area I'm looking potentially for having a short position. Now, on that short position, we would want to see bear divs on the chart. As we make that higher high, we'd want to see higher highs on the price action and lower highs on the momentum waves. Right now, yes, it is a lower high, but it's just barely a lower high. So we'll have to see how that plays out. And then money flow, we want our money flow to be topping out here. And right now, money flow on the 2-hour does look pretty bullish. 1 hour, no bear divs on the 1 hour, I would say. And let's zoom into the 15-minute. Okay, and then locally on the 15-minute, we're now starting to develop some bear divs here on Market Cipher B, and even more regional bear divs here with money flow kind of draining out. So, yeah, we're not, for me personally, we're not seeing the confirmation I need right now yet in order to take a short at this level, but this is the level I'm interested in. And once again, if we can flip that level to support, I think we can get a bigger move to the upside to take out the liquidity of our dead cat bounce highs, or potentially even come all the way back up to this 27-cent area. If we reject from this resistance box between 19.46 and 19.8, let's say, then I expect us to either start forming that sideways range for a bit in here, but ultimately I would expect more downside and to come down to actually hit our lower band of the pitchfork, like Sui did. Okay, that is it for say. Now let's go on to XRP. XRP is coming up into our resistance area. Now we had a couple boxes marked out here. This box was a swing failure pattern into a golden pocket, and we didn't get the reaction we wanted to see. First of all, no swing failure. It was also our channel midline here. No swing failure pattern. We busted straight through it. We busted straight through our golden pocket. So for that reason alone, you shouldn't have taken the short. And this is why it's important not to set limit orders and hope a trade is going to play out. But you can see this big volume imbalance candle here. Busted straight through the highs, no SFP, and we also busted straight up through the golden pocket with that one candle. So unfortunately, this resistance didn't play out, but we came up to the next resistance area, which was our 786 in confluence with the value area high of our range. So let me go ahead and get rid of this box. And it's also your one-to-one target for your corrective move. Now, I have to say with this push up, first of all, we bounce from the bottom of our channel. This is our more macro channel. We bounce from the bottom. And since bouncing from the bottom of the channel, this does look more like impulsive price action to the upside. Let me just pull that all the way. And the reason why I say that, we got our nice low. We have our high. We have a higher low bouncing from your golden pocket. That's your wave one, your wave two. This is an internal wave one, an internal wave two. And then you're in your third wave right now. And that third wave could reject from where we're at. We could see a fourth wave down to that 382 0.5 Fibonacci. And then we would see two more 4.5s potentially coming up to the top of our channel. So let's go ahead and pull from the lows of wave 3 to the highs of wave 3, our wave 4 targets, which are going to be between the 0.382 and 0.5. And actually that 0.5 Fibonacci looks really nice for me as a local support level, because now, a couple things here. We've flipped our channel midline. We've broken above our channel midline. So now it's going to flip to support. So if we do reject from this area, we might be able to see that 3-wave corrective move down to backtest our channel midline. And it's also the point of control of your range. If we reject from this resistance that we're at right now, it's your value area high of your range. So we reject from the value area high. Oftentimes you'll see a move back down to test the POC before trying to attempt to break it again. So yeah, we're at resistance. It is not really seeing a good rejection yet, I would say. But we are starting to find resistance here. And if we do get a move down now locally to that 0.5 Fibonacci, that could be a possible scalp long opportunity. That's at 241. At 241, if we do come down there locally, I now would mark this actually out as a local box of support, because it is your POC of the range, because it is your channel midline, and because it is your 0.5 Fibonacci, which is a wave 4 target. If this is going to be a double 1 2 1 2 1 2 3 4 5 4 5, potentially coming up towards the top of the channel. Yeah, and the thing is with XRP is the dumps, the wick that we saw on the dump was far more aggressive than many of the altcoins. So a lot of the altcoins have already taken out their dump lows, at least on Coinbase. Now on Bybit, we've dumped way low on some of the coins. AVAX dumped to $8.50 instead of $17. We saw much larger dumps, even on XRP. You can see XRP on Bybit, it dumped all the way down to $1.16. On Coinbase, we only came down to like $1.77, $1.76-ish. So, but even with Coinbase, this wick that we saw on XRP was so aggressive that we might not come down to take out our dump lows like many of the coins did. But if we do come down to the value area low again, we could see a bounce from that value area low. We did front run it on the dump last Tuesday. We did front run the value area low and our support level that we were looking at with the golden pocket there as well. Actually, we did hit the golden pocket. Yeah, we did hit the golden pocket. We're bouncing. And the big thing right now is not only are we reclaiming the POC of our large range that goes back to December of 2024, but we're also reclaiming the POC of our small range here. So for now, we could say XRP is in a sideways range after the big dump, and we could continue to range here, rejecting from your value area high and coming down to your POC again for a local, that's supposed to be green, for a local support long position. Or we could be starting that impulse up, and because we're breaking above our POC, and you can see we broke above it with volume to the upside. A nice big volume imbalance candle on yesterday's candle. Actually, that's today's candle. I keep forgetting we closed an hour ago. So yeah, with today's Monday candle, we busted quite a bit above those POCs. and we could continue pushing up to our more macro resistance that's going to be up where the macro value area high. We have a 786 up here. We have the top of the channel, which is now kind of getting not so much in confluence, but we have a naked daily, naked weekly point of control, and a daily level. Really, that's where our big areas, and that's also your macro golden pocket there. So yeah, that's what I'd be looking at right now for XRP. It does look a little bit more bullish than some of the other altcoins, and our money flow looks very nice here on the 1 hour chart on Market Cipher B. Now NAMI, it is about to cross over into the red again, and we do have very local bear divs between the two highs that we made into resistance here, which could give us that. So because NAMI is seeing local bear divs between those two highs, it could give us that small rejection to backtest that channel midline before breaking this, continuing to break up here. And that's, but with our overall money flow on Market Cipher B, which is slower, but it also tends to kind of stay on course more, I will be looking now for potential longs on XRP to continue breaking up here. Okay, that's about it for XRP though. Let's go on to Chainlink. Now, guys, Chainlink on the more macro timeframes, we did bounce from just such a key support level. I mean, it's the bottom of our macro pitchfork in confluence with our 3-year long range, or 2-year long range, excuse me, from November of 2023 to November of 2025. 2-year long range, we're bouncing from the point of control of that range in confluence with the bottom of the pitchfork. The last 2 times we came down to the bottom of the pitchfork, we had significant moves up from it. And macro point of control, we had this marked out long beforehand as a potential swing long opportunity, spot buy opportunity. But I am still concerned about Chainlink dumping lower here. The money flow is still looking kind of bearish here on Market Cipher B, and we did print that red dot and momentum wave topping out on NAMI. So there is potential still on higher time frames that we are going to continue to make a lower high before making a lower low, continuing the overall bearish trend here. But we are getting a significant bounce up from our macro support level, and you can see that the next box of resistance that I have laid out really is going to be around that 17.65 liquidity grab. It is going to be our golden pocket from the highs of your range to the lows that we made Tuesday, golden pocket. It's also the point of control of your range is right around there. It's towards the bottom of that box. But the point of control, 17.5 to about $18. And that's the area. It's also the bearish backtest of your pitchfork band. So we bounce from the bottom of the pitchfork. We might expect a dead cat bounce to come up to backtest that lower pitchfork band again. And if we do reject, we finally might break this pitchfork to the downside, or at the very least form a sideways range between the bottom of the pitchfork and your pitchfork band and start forming a range down here for a bit. So for me, I'm just trading Chainlink, nice bounce from macro support, and I'm expecting a move. I'm actually long on Chainlink from down in this area, and I'm looking for a move up to that 17.65 liquidity grab into your golden pocket and into the bearish backtest of the pitchfork band. Zooming in on Chainlink, we can look at this lower range that is formed. And you could pull it from the range lows, or we could even pull it a little bit more sideways here. I would say right after that big imbalance candle. Yeah, and we're above the value area high of that range. So I do think it's a greater possibility we continue pushing up here. If we pull our Fibonacci from the lows that we made last Tuesday to our highs that we made today, golden pocket is going to be around our point of control of the range. I don't even know if I would trade that. If we rejected right now and came down there, I don't think I would be looking for longs there, but just know that that is an area that you might be able to get a long position on. But because we're above the value area high of our local range, we could be looking at our 382, which does bounce you in a strong trend. And that 382 is going to be around the bullish backtest of the value area high. And because we're breaking above our small range value area high, we might come in a three-wave. Now you want to see a three-wave corrective move here, a three-wave corrective move to backtest. And if that's a three-wave corrective move to backtest and we start to bounce, then I would be looking to take it up to your resistance. So around 15.53 could be a local scalp long opportunity. As we're coming down there, you want to see a three-wave corrective move, and you're going to want to see like probably 12-minute, 5-minute bull divs, as you're coming down into that area. So you're going to want to see, 12, 15-minute. Let's go to the 15-minute chart. You're going to want to see that three-wave corrective move down, and you're going to want to see those bull divs on the chart as you're coming down into that area. Money flow also not in the red, but maybe curving back up into the green here, or at least bottoming out. So that's what I'm looking for on Chainlink, 15.53 potential scalp long. And then once we get up to this area of resistance here, the box between 17.6 and 17.9, that is going to be our key back test to see if we can, if we do reject that, I expect us to continue at least ranging sideways here. And the reason why I'm more inclined to say that Chainlink is going to range sideways is because we're at our macro POC. And at these macro POCs, you generally see ranges form. You don't see a straight drop down to it, followed by a straight V-shaped recovery here. You'll generally start to form a little bit of a bottoming range and let the market kind of start buying up around fair value before getting that big push up, if we are going to get that big bullish push up. So that is what I'm looking at here for Chainlink. Real quickly here, we can just throw on this ascending channel as well. You have your ascending channel here, and you can see we're bouncing from the channel midline now. And if we do come down to that, the bottom of the channel, that is going to be where that macro 382 is going to be in confluence with the value area high, your local value area high. So if we see something like that. And we might just continue chopping within this channel and not even come down to backtest that 382. We might hold this midline right now and continue working our way up to the top. But that's what I'm looking at for Chainlink as well. That's what I'm looking at for all the coins today. I will be streaming tomorrow at 2 p.m. Eastern Standard Time. If you did get any kind of insight into the market from this video, please hit the like button. Please subscribe to the channel, and I will see you guys tomorrow.